Hi and welcome to Top Tips Tuesday again. Jeff here again from GCD Property. So this week's tip is on how to maximise your tax savings on your investment property. Now, tax is one of those components of making a profit, so look at it that way, but there are ways we can save tax, and if we can, why not? So hope this will help and give you some insights, and or might be just little reminders there, the importance of having everything in place to maximise those tax savings. So the first tip is buying in the correct structure. So by that we mean, how do you buy the property? Do you buy it in your personal name, or do you buy it in a family trust or a company structure? Generally speaking, if you're buying it in a personal name, you get those tax savings against all the costs of the property directly in your tax return. So it's a much simpler and generally will be higher tax rebate. So again, look at the pros and cons, work out which way is going to be the best. It's very expensive if you have to change the structure once you own the property. Essentially, it's like selling the property to another buyer. So you have to pay stamp duty again. There's lots of costs involved, refinancing, etc. So it's really important to get it correct structure up front. Look at both ways. If you're not sure, get good legal advice, accounting advice as well. Getting a depreciation report. So this is a report on the value of the depreciable items in the property, and that's done by a quantity surveyor. So when you first buy the property, that's the time to do it. If it's a brand new property, you'll really maximise your tax savings, and a quantity surveyor can generally do a report off the list of fixtures and fittings in the spec sheets of the new property. If it's an existing property, you need to get a quantity surveyor to inspect and value. Very important. Also, when you're doing renovations to properties, look at whether you can claim a depreciation on some of those replaceable items. Some you can, some you can't. So again, get the right advice on that. Number 3 is use an accountant that's experienced in investment properties, because every dollar they can save you on tax is a better off a dollar in your pocket. So those first two points that we talked about, the accountant will help give you advice on that. So they're a really integral part of your professional services in terms of your property investment. So a good experience, an accountant experience with investment properties will definitely save you in the long run and maximise your tax savings. And just remember, tax laws are always being revised, there's changes coming along, so make sure you use an accountant that's up to date with the new policies and procedures coming into place as well. And tip number 4, keep a receipt for all purchases and all the services that you have on the investment property. The accountant can only claim what they can actually see in receipts, so always get receipts for everything you purchase, all the services that you do. One little tip there to make it a little bit easier for yourself is use a property manager that's got access to other services like handyman, electricians, plumbers, builders, and they can quite often pay those other services out of your rental account. The benefit of that is it makes it easier. Generally they have great trades and services, good quality people, because they're giving them referral work. And the other benefit is also that when they give you your financial end of year statement for your rental property, that will show you all those expenses that have been paid out through those other services, and they keep very good records generally. So good property manager that can have access to those services, they'll help you keep those records in place, which will maximise your tax savings. So hope this helped all those property investors out there. Tax savings are a great thing for property investors in Australia, so we really want to take advantage of every dollar that we can claim. So thanks for watching, and see you again next Tuesday.